What's up, y'all? Good morning. Can you hear me? Check, check. We good? Okay, let's go. Let's first check up market rational, irrational. All right. Let's look here. Market's opening nice and clean. So check one, we're irrational. Rational. All right, that's pretty good. Okay, number two, VIX has not moved outside of risk interval band. That's pretty good. As well. Let's get back up to rocket scooter front and center. Let's run SPY and get the numbers. Good morning. Hey, Abe, what's up? What's up, Andy? How y'all doing? Okay, let's go. All right, QQQ mean reversion. So this is a 270, 272 and a half. Market's probably going to trade up from 270 to 272 today. That's good to see that. SPY's in the same boat. Okay, good. So market, we're going to replace today now because the market is rational. Everything's good. Yesterday, market was irrational. Keep that in mind, right? So yesterday there were people talking about different things. On my end, the market was irrational outside of the doomsday band, so we didn't do anything, right? No new day trades, nothing. Okay, so we get to strategies. We're going to look at any bull setup strategies here. Anything greater than a monthly hedge, and anything that's got a monthly breakup as well. So let's see if there's anything that is breaking through. Like shows to nothing yet. So when I do this, nothing's broken through. Let's just look at ones that are above monthly. Eli Lilly today, Adobe, 3M, they kind of gap down. Okay, so that one is dipping a little bit. Netflix still running after that big run up yesterday and looking pretty solid. CVX, Twitter, Honeywell. Let's see what Honeywell's doing. Honeywell's okay. I'm about to share our stream anywhere. Okay. All right, I like what I see. Okay. Time to wake up. I'll get some music on. I think I found one of those playlists really quick. Still on vacation. Still just chilling. Oh. Oh, I don't want to do that. Let's do something a little chiller. That'll work. Came out on SPY today. Things are looking solid there. Like I said, any breakup on 368, resiliences are greater than 0, which is good. You still have mean reversion in a liquidity pocket here. Normally when you touch wall and middle, it is random. So once you hit liquidity pocket, there's no more things you can actually say about the market. So from here, anything that is 368.5, which is in between here and here, is going to be particularly random. Mean reverting, same thing. And barrel long down is going to be, if you break to this direction, There's a bounce point there. If you break to this direction, there's equilibrium there and a resistance there. So today we were sandwiched likely inside of here. We probably won't get the run up or the breakout until we get to tomorrow's expiration. But there are good scalps from the bottom to the top. So here to there, there to there. Let's look at some of the big hitters today. And let's see what earnings season, earnings calendar says about this next week. Today we have AT&T. All earnings came in green today, which is good. Beating expectations. We saw this morning Philip Morris, Union Pacific, AT&T, Blackstone. Anything. We have CSX aftermarket, I think. Okay. So tomorrow, I think it's going to be Verizon, if I remember correctly. And let's see what else. Yeah, Verizon, Record Special Schlumberger. Okay, so not too big of an earnings tomorrow, but I think it's the following week where Tuesday is when we have Microsoft, Google, Visa, Coca-Cola. So leading up into Tuesday is going to be one of the bigger earnings days we have. So just remember, if you're buying options going into earnings, you're going to be paying extraordinarily high premiums because of the IV. So, depending on what you're doing, we're not going to day trade long inputs and calls into earnings. I'm going to try to dump some of my stuff before earnings if I'm just looking to get that day trade. But get it. But not buy to hold into earnings. So if you don't break through the expected range, your IV will collapse and you will not make anything. Let me close that down. Let me know if the music's too loud. Good morning. Auto input feed seems lower today. Audio input. Oh, my microphone. And as Marcus said, correct. In the money, options burn a lot less from earnings. IV crush as well. If my microphone's lower, let me know. I'm still on vacation through the weekend, so I'm going to be here on my laptop until then. Let's get some of these. We're going to talk about the good ones. JP is looking good. Watch for these MHP breaks. We are seeing resilience start to try to show some selling. So careful there. All right, let's go ahead and search for some MHP breaks. One more strategy. I love the scanner; it's so good. These new parameters just blow my mind. How easy it is now. I just have to go through so many steps to get these things. United Airlines, there it is, right top of the list. Boom, breaking up. It's that bull long down. So we go here, right? We're gonna look at UAL out the door. Let's go ahead and look at monthly mode here, UAL. 36. Yeah, this thing is nice and solid. Oh. Whoa. Okay. Can do something really quick, guys. Hold on 1 second. So yeah, things are looking pretty solid at United. So nothing on the upside as far as resistance goes. A nice little breakout 39 target. There's pretty much bull clearance all the way through 41. I like the way that that's looking. MHP breaks. So these are the ones that broke into the bull side. We have United, Zoom, LAZR, STX. A couple of them. There's a lot of them usually. So there's a bunch of decent plays going through McDonald's. Like McDonald's is looking. Oh, McDonald's is certainly looking like a good play. Let's put this here, McDonald's. Like the way that's looking, 240. Yeah, so again, all both side runs here. Let me pull up a regular. Uh, See, there's a lot of stocks. I'm gonna tell you, despite the recession, there are a lot of stocks not really caring about that. McDonald's. This is one of our picking price targets videos. I'll link that to you in just a minute in the description. Make sure you go there and watch this. And these are the gap fills in McDonald's. Upside, there's some pretty big runs. 257 and some change. Oh yeah. Pepsi looked like this. McDonald's looked like this. I put a little Pepsi in my portfolio a couple days ago, if y'all remember. So 257 for Mickey D's on that breakout. That's a good play. I might grab that myself. Just let me take a look at it. Oops. Now I'm not expecting too much of a move today because the SPY and the QQ are definitely mean reverting, but there could be some plays to pick for the long haul. The next quarter or so. Yeah, that's a decent one. 257. There's a risk to reward from here. 7 to 1 R&R is really phenomenal. I like odds like that. Okay. Oh, let me read those comments. I don't even have the comments on the screen. Sorry. I'm still on vacation, still in like wake up mode. Um, okay. What are you guys talking about today? Yeah, it's pretty stretched to the upside. I mean, yeah, but the market's looking like it's one to press through and has some upward momentum too. So I mean, what's the doing today? We're running it. We're having an issue with our Google thing. I can't explain what it is, but I think I know why. Google's doing a power play. Manage storage, yeah. So Google pulled a power play on me. I turned on Google basically. Hold on, delete. Okay, should be good now. Google started syncing all my photos, nuked my Google Drive. Okay. And then my Google Drive filled up, and then now I can't edit Google Sheets. Then they're like, give us $1.99 a month to join. And I'm like, oh, okay. I already do that with Apple, so no thanks. What's up, you guys? Make it look so easy. Did a lot of you already know the terminology we was talking about? Are you learning on the way? So what everyone here is learning, if you guys are checking chat, when he's asking about is some of the terminology we have. So there's a glossary in Discord that will show you kind of like the meaning or the words that we use, the words that we've invented or created here. That's one of them. Another one is that we do have some videos that we are making and releasing. And I'll share with you guys the new layout of all the training stuff. But in reality, we have kind of like these two videos that you need to watch right out the door. I want everybody today, like I said, I keep saying, if y'all don't watch these, if y'all watch these videos, if you don't watch them, you're going to miss out. But if you watch these videos, they'll get you right up to speed as soon as possible. Okay. There's the risk management plan that talks about what I do every morning, and it's just like a little 10-second checklist. That's one of them. Number two is this one. This is going to give you the different 5 rules that we use for recognizing rational or irrational market cycle. No, I'm just on my, hey, what's up, good morning. I'm on my laptop, and it is cold. I am cold, but I don't have a cold. I'm just on vacation. I was looking up the streaming for you guys, just checking things out. So Mickey D's is looking pretty good. Looking on the scanner here. My scanner settings, pretty neat. You guys, when you all do this, you're playing with the free trial. Make sure you go to rocketscooter.com. You get yourself the free trial of our scanner platform. Get your mind blown. And I love it. Go here. Link in the description. I'll post it in chat. Go there and check it out. You're going to be able to play with the same tools I have. You can see the market maker positions, see the market maker hedging. You'll be able to scan for liquidity maps, which is exactly what I do. Find all my trades. Let's go up here. And then let me find, what was I looking for? Oh, liquidity map. Here it is. You're able to search for setups that are based on hedge pressure or certain wall configurations that we want. We call this liquidity map, colloquially called the playbook. So I can find setups inside of here that match what I want to look for. So today I'm going to look for all the bull long ups and all the rest of the bull ones. So I'm going to add strategy as liquidity map on there. Adding all the bull ones, check. I'm going to add things that are currently above monthly hedge pressure, which means bull structure, meaning above here. And all this terminology is in all of our training. You have to watch all of our training videos to get up to speed with everything we do. Everything we teach, it's kind of like going through a brand new school of thought. Imagine if you were going to learn technical analysis, right? And you look at a book and it's like a huge textbook with a million indicators and all this nonsense, right? So here you're starting completely over. You're going to learn, over a dozen new things, concepts, indicators, whatever. None of it's technical analysis in the traditional sense. It's going to be different types of analysis, mostly positional risk, which is the type of analysis we've invented here. It doesn't use price and time, which means candles to predict, or price, time, and volume to predict future price, to predict pivots in direction. Instead, we look at distribution of people's positions, rules that market makers have to follow, hedging models, and things like that to predict what volume will be at a price, regardless of time. So we look for, well, actually, we can look at time if we look into like monthly mapping, get estimates into the future a little bit. But what we look for are people's exact positions, and in those positions, we can tell where Wall Street's risk is at, and then we just trade with them or trade with market makers, so what you want to do. And so all that stuff is unique here. Nobody in the world does what we do. There's a reason it's taken off, kind of going viral, because it's a brand new way to think of the markets. After 100 years, people just put more indicators on a chart. And these days, you see nothing out there. If you guys ever go shopping for technicals or anything like that, all you're going to see is just an overwhelming amount of just chart indicators, right? It's silly that 100 years nobody's done anything different than that, but nowadays you have unusual options data. There's a lot of providers that give that really good stuff. So like in the modern day, you guys have to have your appetites ready to learn entirely new concepts, because bigger and more versatile data providers are hitting the scene. They have better information. The exchange are releasing more information. So people are able to actually give you better information and more information to do these kind of analysis. Like the data that we get from our data provider wasn't always available over forever ago. So now clever providers are creating new methods with the new available data. And that's kind of neat. It's the modern day. So anyways, we're going to teach you guys all new stuff. And so here in Trading Strats, we'll show you, these are the irrational market checks, initial checks for unusual and usual, and then the pivot equations. So these are all invented here. You'll hear words like doomsday, resilience, yellow line, red line, half gap, gap fills, liquidity pockets, hedge pressure, walls, monthly hedge pressure, etc. These are all of our calculations. We've invented every single one of these. These are all part of the liquidity map process. So you wake up in the morning, it's 1, 2, 3. Is market irrational or rational? There's a 5-step process. It takes 10 seconds to do this. You check. There's a video I just linked in the chat earlier. It's also on our page called Irrational Markets, how to predict them. If it's irrational, you just sit out and don't make day trades. If it's rational, you say, okay, move on to the next step. Are we unusual or usual? Usual means I just go in as hard as I want. Unusual means I'm going to play cautious, maybe additionally volatile or something like that. I play smaller. So if it's unusual, it's just an initial flag to say, okay, let me bet a smaller fraction, like a fourth of what I normally do. Let me play, but not play too hard. And then if everything is good, like if you have a rational and usual market, and all's fair, and I come through here and I just play hard against all of the different pivots that we have. Stop rolls will literally tell you when I don't trade. If you're not following these stop rolls, you are missing out on the best part of what we have to offer at this place. This is something that we put out there that nobody, I tell you, you have trade rooms, you have whatever. That you guys join or look at. And then what I'll tell you is that one thing that nobody hands out to you or gives you is a risk management system or style. This is my risk management style. First of all, the word irrational is capitalized in bold letters 1,000,000 times for that particular reason. If any of these things flag, I sit out for the day, no matter what. A couple of these things flagged yesterday, as a matter of fact. So when they flag, you do whatever you want. What's up, ACB? Good morning. You do whatever you want. But this, if you're like, I want to learn how Matt trades, these are my rules. Do not fight them. There was somebody in chat yesterday that was still, yelling and screaming and shouting about plays they were making. And I'm sure it's confusing to all you guys, and that's why I stepped in and started, like, reminding everybody is that people are going to have their own styles of trading. Somebody was like, I'm confused because this is the market irrational. And the person was like, well, this stock looks great. So not everybody in our chat room is trading by my style, right? I will trade by my style. So your consistency with learning from what we teach here is to watch me. We don't hire or teach anybody our style to go and chat to show off our style. So other people in the public chat are going to be showing off their own styles. Just keep that in mind. Ooh, am I going to make this 40 characters shorter? I'll come back and edit that later. Anyways, these are the 5 rules. That video will cover that. Entry rules are a bunch of different entry rules on how I trade options. They're all on here. Longing options, shorting options, rule of thumb for shorting, rule of thumb for shorting, how I exit options, how I do swing trades for bullish setups. I mean, it's all in here. Glossary will give you information on where all the glossary is. So all this stuff should get you guys going and situated. Let's double check SPY really quick. Looks like just by looking at resilience right now, the SPY is hanging in there and kind of rallying a little bit. So I like the sound of that. Remember I told you guys today, if there's a hold on resilience is positive. The 2 takeaways from this are the yellow and white resilience lines. They will predict if yellow and white is going to be support or resistance. This is arbitrage based on the move is arbitrage based on how much the stocks move before the S&P itself moves. So when you have SPY and resilience together, this white line is the tiebreaker at this white line. If it's above 0, you're above the line. If it's below 0, you're below the line. So as you see, we're trading below the line with resilience being positive. This is arbitrage. This is a leading indicator, and they do not exist in Wall Street. We're one of the first ones in retail platform. This will show you that same exact thing that we tell you all the time, is that the stocks move first. If S&P is trying to sell off and the stocks are holding resilience, or resilience is positive, then this wants to be above half gap to fill the gap the other way. Does that make sense? Close to target on NVIDIA. Oh, let me check NVIDIA today. Thank you for reminding me. Forgot to look. So, I totally forgot. Thank you. Yeah, I'm still a little kind of vacation mode, right? My NVIDIA target, I have 130 calls on NVIDIA, and my NVIDIA is up $4,000 today. Or no, sorry, 4,400 since open. Yeah, I forgot about that. I have November 11th, 130 calls on NVIDIA. So they're finally starting to take off. So I have 130 calls. I didn't even check NVIDIA, so thanks for reminding me. So NVIDIA, yeah, Mickey D is looking hot. Hopefully NVIDIA hangs in there. I got November 11th, so they're down here. So yeah, I got 130 calls. I think I grabbed my NVIDIA. Oh yeah, so we had this big day right here. I think it was here, actually. We gapped up. S&P started selling. I dumped out half of my S&P right here. Then at the base, remember I told you guys I grabbed NVIDIA and Pepsi right here. And then now they're both running, so that's pretty good. Did I hedge with puts yesterday? Absolutely nothing. I didn't buy or do anything yesterday. Market was irrational. I should have hedged with puts if I had the desire to. Would be a smarter way. I just didn't want to lock up any of my buying power. Hedging will buy you some credits, some margin credits, sure. But I didn't want to lock up any of my buying power, period. Because what I normally do when I'm long the market is I'll hedge with futures. It's the quickest way to do it. Alan, so if I'm long a bunch of options, calls especially, and market starts collapsing below those dynamic hedge pressure levels I give you guys, then I just go in there and short the NASDAQ futures. This will hold me overnight. I do have a little quick calculation I'll do to balance percent per percent. So does that make sense? Hedging with puts, same thing. But the problem is it's much simpler and much cheaper to hedge with futures. There's no other mechanics, and you can trade them overnight. And the taxes are better. So anytime I want to drop a hedge, I typically like to do it with futures in the overnight. So if the market's closing nice and crazy to the upside and I'm long, and then market may sell off overnight. If I find those dynamic hedge pressures in a range, then I'll start to short futures if we break to the downside, just to hang on to it. And also if I'm waiting. Now, the plus side, the options is a set it and forget it. I can just buy my options and close them in the morning. I'm stuck overnight anyways. In futures, I have to actively manage a position overnight, so I have to make sure to put the stop losses in there and watch it. But no, I did not do any hedging. I thought about it, but things looked okay, so I didn't do anything yet. But I would have definitely shorted futures to protect some of my long stuff. That's really smart that you said that. I'm very happy to hear you guys think like that. Okay, my NVIDIA is continuing to go. That's running pretty good. So I'm long NVIDIA. I'm long JP Morgan. You guys know my position. They've always been the same. JP is still running, still paying the bills here. Apple's probably the one that's going to be the loser. I mean, my Apples are 150. So who knows, right? Maybe we'll get close, but they expire tomorrow. So we'll see. Apple, JP, NVIDIA, Pepsi. My other long. See how Pepsi hangs tight and keeps running. My Pepsi is October 28th, 180 calls. So Pepsi's for a breakout run. See if we get it. We'll see. And SPY, I still have a small portion of my 375 calls. Today's run up, nothing too crazy. I'm still hanging on to the swing. So I'm up, I'm down. Yesterday, I'm up again. Today, on some of them. But overall, all my trades are up because I got in right for the bottom. So it's really good. Pepsi and SPY again. Okay. Love it, baby. Okay. Remember, I only short the market. Strategy, if you guys wonder how I play, I'm always long the market. Always long the market. Always long the market. Unless the market is bearish. And the way market is bearish is the following. You open in bear structure. Number one. That's rules that I short. We do not open in bear structure. Above monthly is bull structure. Below monthly hedge pressure is bear structure. We do not open below it. We open below it, I short against it, and that's when I short. Any other time, I'm on my hands looking for long plays. You guys, I'll tell you the best thing anyone's ever told me my entire life. You ready for this? Don't ever short the market. I don't care what you do, ever. I mean, ever. You're not a hedge fund. You don't have infinite money to buy calls against your short. Don't short the market. There's a reason your 401k always longs the market and sells when it's not bullish and waits for it to be bullish again. It's because that's the one trading strategy that always works for everyone. I employ that in my day trading as well. I do not like to short markets. I think shorting markets is a newbie thing to do. I think that you have to be not a newbie thing to do, sorry. It's a very complicated thing to do. And it's newbie to jump in and not understand what you're doing. You're not just pushing the short button and letting the market fall. Short markets mechanically work differently. Hedging them works differently. It's not the opposite of long in the market. It's a very different type of trading. It's a very different style of trading. It's like long in the market is a piano. Shorting the market's a trombone. That's like a completely different instrument. Not even the same in any aspect whatsoever, other than you push a button and put your money on the table. So you have to get good at one side. Longing market side is always better. What do you do in a bear market? Well, 1 out of every 2 candles in a bear market is green anyways. I always just wait for those days to fall, let them fall, come back the next day, then I take the long breakouts. How many of you guys here are sitting here like, ooh, let me try to short that? I'm like, ooh, let me wait. This could be a long breakout. Difference between you and me. Makes sense? So whether you're a bear or a bull, you need to be one and stay one and get really good at it. And if you're not getting the side of the trade you want, then sit out. A loss of 0 is a gain. And most of you are going to lose money when you're trading until you get really good at this for a long time anyways. You sitting out, not getting the side you want, is learning how to control yourself while you're trading. You have perfect control to sit out. You know what you're doing. You know that you don't get the trade you want. Wait for the next day. Fear of missing out. Some of you are seeing right here, ooh, let me get in on this long. It's rallying, right? Down here is when I'm in on the long. I didn't do anything today, but in general, if I was doing a day trade, because I'm already in all the trades I want to be in. Right here, if it hits the bottom right there and resilience is greater than 0, I know we're going to pop above half gap just like it shows. You guys see that, right? our indicator shows that. Does everyone see how resilience is pretty much, the best thing ever for me for trading SPY? I love it. SPY is trading lower, whereas this white line is above zero. So it's just holding, and this actually tapped zero, 938. And then 7 minutes later, we pop above. That's what it does. So in here, the opportunity is seen right here as the market's trying to sell off. This is not going below zero. The opportunity is I get in here to go long, not let me bet that it goes short. Now, if I want to be a bear, is when we open in bear structure. Then I switch my piano to trombone, and then I start looking to short markets against hedge pressure from the bottom. That's my difference. Did you irrational up versus irrational down? Discuss. Irrational means irrational in general, Alan. What irrational means is that liquidity is so absent in the near range of price that market makers have no gauge easily on what liquidity is. Their bid and ask is spread out. Options prices get really wide. It's really hard to grasp. So irrational markets mean that it takes very little to move them very far, and everything that you use, indicators, whatever, will not work. Any moving average that crossover, the market's going to jump around in such a high range in such a short period of time that you're not going to get good signals off of any indicator that you use. That's what irrational means. Up or down is the same way. Now, the difference between if you are rational and the market is on, irrational can come from 5 different things that we call it. Some of them have nothing to do with direction, some of them do. So let's talk about that. I'm going to go down to the stop rules. So when VIX travels more than one risk interval, when VIX moves so far so fast, it means the volatility has either completely collapsed or completely exploded. You can have 2 different types of trading in that environment, right? Of VIX going irrational. Irrational to the upside is the worst possible thing that can happen to the stock market. Is the VIX itself moves outside of risk interval band to the upside. It means there is no bottom in the market, period. The stock market could fall like a rock in a pond and just plunge rapidly. And we've seen it happen. We've seen VIX break to the upside, and the S&P fell 100 points in the day. In the last 30 minutes, we've seen it fall another 100 points just because VIX was irrational. And you think, okay, it's stable and bottoming out. And the S&P falls another 100 points in the close. That's the worst you can see. When the VIX collapses to become irrational, then what happens is your IV completely collapses as well. And sometimes the options will just completely just tank. You don't want to, when VIX moves irrationally outside of those bands, you definitely want to go out there and start day trading options. If usually big flushes, the market doesn't like to do that. If I'm a bull and the market VIX to the downside, that's what I like to see. I like to see a volatile market completely turn around. I always look for bull signs. So even so, when the VIX moves that far, even to the side that I'm on, see if VIX collapses that much, I still have to be very careful because VIX does not like to be that distance traveled. So a lot of times it will snap back in. So your bull run can have big dips in the middle as that VIX stabilizes. So in either case, you don't chase a trend when VIX is at that band or further in either direction, because VIX it usually retraces that level to try to get back in the band. So another thing is here is that this doomsday band, up or down, just don't trade, period. If you move more than 27.5 points from yesterday's close, the chances of your moving averages, your MACDs or whatever, actually showing you overbought, oversold, even liquidity map, we put on the sidelines when you're irrational and only use them religiously inside of the bands. I can still use them outside of the bands, but I have to know that there's a higher chance of the trade not working. So the best possible arrangement is being inside the bands. So this pre-market check, irrational to the downside, there's just no trades the way I trade. So if we open outside the bands to the bottom side, I don't long anything and I don't short anything either. If we open irrational to the upside, normally I'm trying to look to maybe exit my position for it to test the band, or I don't do anything else again. Big long breakouts, I will wait to see if we fall back to a monthly hedge, and then maybe I'll go. Sit out day today? No sit out day today. Today is great. Any catalyst, that's an easy one. Up or down, I exit the trade no matter what. Irrational, if UVXY hits a call wall, typically I exit a trade, and once that process takes place, I don't do anything new up or down. So VIX, this is a one-directional thing. VIX comes here, hits that call wall, typically volatility expands. I don't normally use that to pivot my trade to enter. I usually use that to exit. So an example is I'm long the market, market's rallying, and UVXY is falling and hits a call wall. I will exit all my trades there because we know when you hit that call wall, it usually bounces really rapidly. VIX call walls are very weird. They're the only thing that does that. Any call wall. We don't do that with stocks. So there's usually a very, very, very rapid bounce off the bat. So that's when I exit my position on the day trade. So this is used to pivot me to an exit. Irrational, anytime you break hedge pressure in either direction, close your platform down. Market's dead for the day. So that's hopefully some guidelines for you guys. I'm glad to share that with you. Great question, though. You guys are always looking to ask me questions about what I think or what I'm doing. Okay, let me go here really quick. Was that helpful? Okay, so Pixel Cal, today's a sit out day. No, today is definitely not. None of those things flagged. So that video, if you guys go to our Discord, there's a link to some videos, and I'll show you this. We redid everything, but if you go to training and videos, everything's organized in a certain way now. This is to tell you how the videos are lined up. So you're going to watch them in this order. I'm going to make them look prettier, but this is the order that you watch them in. And we're going to be releasing them in a certain order. This is the new education. You want to follow this pretty religiously. These are sit out rules today. None of them flagged. The quick market check is very simple. I pre-do everything here. Anything inside of this band is rational, which is good. Rational, we open rational, which is good. VIX has not moved more than one risk interval here, and these are done with our bot. So risk interval is an exploit of something that goes on the actual Globex. So we exploit a few things in the futures exchange, mostly margin requirements based on CME span are dictated by expected volatility. So if the market opens outside of that expected volatility, you know that the market's going to hedge itself a little heavier and be weirder. So inside the band, check, good. VIX didn't move more than its distance, check number 2. So those two things are good. No catalyst today, no. So that's also good. So let's check. Market, did it break hedge pressure? No. We actually are holding nice and steady. We open above, we're still above, so that's good. Breaking hedge pressure, we opening above, trading below. So essentially everything looks good today. Is resilience just the number of SP stocks above half gap, Sunshine? Here we go. Let me walk you through resilience. It's not the number of stocks above half gap, but that's part of the equation. There's a little bit more parts to it. But if you think of it like that, that's in the right ballpark. So it's the number of stocks above half gap without going through all the math that goes into it, but not necessarily. One of the major components of it also has market cap weighting. And so the other part is it's the rate of implied hedging. So rate of implied hedging is as follows. Half gap pivots to fill the gap. If a stock breaks through half gap to the other side, there's an implied move for it to fill its gap. So the stock needs to move a certain distance to fill the gap, and that's the implied move, the implied hedge. So it's the acceleration of market cap implied move to fill the gap. which, what is all that? What does that mean? There's some calculus in there. Clearly, so it said acceleration and rate. This is the rate at which stocks are flying, or way to do it. Stocks are filling their gaps. So at 0, it's at equilibrium. If it's above 0, then it means there is a particular rate where the stock needs to move to fill its gap. It's like accelerating. When the acceleration is higher, example, if resilience is higher, then any stock that breaks through resilience now, bottom to top, sorry, say the example, resilience is 64. It's higher than 0, and it's getting higher. So earlier in the day, if a stock breaks through half gap, it's likely to slowly move up to fill the gap. But if a stock now breaks through half gap, it's going to fly up to fill it. That rate is higher, so it's going to just complete the move really quick. If that makes any sense. Did I load some code on Thinkorswim? Yeah, so I made an indicator to not have to manually draw my green lines every day. And I just type them in every week to get that distance, and then it just draws on Thinkorswim for me. That's not sanctioned by Rocket Scooter officially. If you're in our lifetime group, we create like side tools like that to share with our lifetime while it's in beta. When it gets built into our platform, you guys will get it for free. Or if you join our lifetime group, we give you all of our beta tools. The best part about lifetime group is you're actually part of the process. So if you go to rocketscooter.com right now, link is in the bio. Link is in the description. You can check out the free trial and see if you like it. If you join lifetime, you're in a whole different community and club. Not just the using the platform, but that's also the group that we work together with to build this stuff, to come up with new indicators. We test things together and things. So if you guys want that indicator, like I said, our lifetime group is a huge think tank that creates all this stuff together. Because they're the custodian of some of these things, they share it with each other inside of that circle. So if you join lifetime, you're in like a special community inside of our community as well. There's, I don't know, maybe 600 lifetime members. So like I said, we're one of the largest trade communities on the planet by paid membership. So you guys are welcome to join. Different tiers have different perks. So Sunshine, did that answer your question? If you think of it as the number of stocks above half gap, your brain won't hurt when you're trying to think about what it does. It's not necessarily the correct answer, but it's in the right ballpark. Yeah, you scrubs that just pay monthly. Well, somebody's got to come here and build all this stuff for y'all. I'm too lazy to do it. No, I'm just kidding. No, what we do is like with Doomsday, right? We're testing it out and testing the stats on it. We work as a collective, so everybody together actually tests it out. And we have these things called rule discovery. We'll get together with the whole team and chew on everybody's idea. So we make sure that the indicator works on multiple levels for different things, and everybody comes into the table with different portions of their experience with it. And nothing that you see here, including monthly hedge pressures, has made it to the platform without being unanimously voted by every lifetime member who came to that event. So an example, and that's the greatest thing about it. See, we create a monthly hedge pressure, and we said it creates high volume and bounces. And we say we're going to put it into the platform. We give it to the lifetime. We create some kind of beta tool. They can test it. A month later, we get together. We talk about the rules. The rules can be, okay, when it breaks by one strike, we get out, et cetera, and we vote on the rules. Then we go back and trade it again with the rules, and that's after rule discovery, and then we come back and we vote on the rule. If one person out of all those people votes no, I don't like this rule, then it doesn't become a rule for the group. Unanimous, I mean hundreds of people come to these meetings, and everyone must vote yes. So nothing is made to the platform without massive peer review. One person can't say no. That's our rule. So everything we've released to you guys has been through that process. Doomsday is going through that process now. It will be built into the platform if everyone thinks it's good enough to make it. If the market goes back inside the line, then it's rational. That's correct, Sunshine. If it goes back inside the line, it's good. Things are good to trade. My place today, somebody's asking, 11,100 profit today, this morning. I'll show you guys a picture of that. I think my apples are going to expire. Worthless, but all my others are killing it. So these are bouncing around a little bit. Same positions I had. Apple's basically flat. I don't think I'm gonna hit 150 today, but it could. JP is up. Nvidia is the big play for today, and my spies are up. So Pepsi's still holding flat. Your lifetime. We have them whenever we come up with new things. The last big one we had, Abe, was with resilience. So coming up with the rules that resilience pivots to fill the gap and things like that. That was coming through that real discovery. So we'll announce one for DD before it goes live for sure. But if you guys want to join that process, I'm going to tell you, it's a huge deep dive, and that's probably the best thing we have. And majority of our members are in that program, so they eventually join it as well. There's currently like a 10% off, I think, for that. So if you go to the site, everybody get the free trial. Make sure you don't do it. There's no credit card required. See, we're super cool like that. So you can just check it out. We're growing super fast, so jump in when you can. Prices are going to go up, by the way. Yo, Venom, what's up, dude? Okay, so Spy's looking hella tasty today. You are late to the party. That's okay. So we're looking pretty solid today. All the plays that I talked about this morning, moving pretty good. McDonald's is my call. That one's looking all right for that breakout. JP, that's my play I'm in. JP's still killing it. I got 120 strike JP calls. We hit that today. Ooh, baby. Please refresh me. AJ says I'm with the SP 500, NASDAQ 100, 97 on the platform on the right side. Oh, yeah, they're about to modify and change this. This is the number of calculations that have been completed. This is just a metric. Like I said, this is a miscommunication between my programmers and myself. This is a number we used to have for me when I'm directing you guys in the morning. If I see that this is 0, then I know we haven't got the calculations done yet. It's a quick and dirty for me to say is resilience good or not. So 100 means we have 100 data points, 100% of the data points for half gap resilience. So this is just a metric to tell you that the calculation's completed. Right here, this is to tell me I have 97.7% of the S&P 500 monthly hedge pressure numbers, which is good. Some stocks don't have options. That's why it's not 100%. So if some certain few stocks don't have options, I think like a long time ago, like Berkshire Hathaway never had options. I think they have monthlies now. I can't remember. But anything that's above 90% is good. So 100% means we have all 100 stocks in NASDAQ 100 calculated monthly. So you'll see in the morning, it'll be like 0, 10, 20, 30. The way we're going to display it in the future is a bar that'll just say waiting or complete. So resilience shouldn't be showing you anything until it's complete. That's kind of the idea. So it takes us roughly like 1 to 2 minutes to get all the calculations done with our current data provider. And we're actually working to optimize that to get it done in 10 seconds. But in the course of the 2 minutes, I look at this, and as soon as it's greater than 90%, then I know the resiliences are good to go. Now, half gap resilience, we get that candle data the second the market opens. So this is usually jumps right to 100 immediately. The hedge pressures, we got to cycle that through massive mountains of calculation to calculate monthly hedge pressure for every stock, and then get them as they come back into us. When it went outside the doomsday line, would you exit profit on a day trade, Jeff? I would trim on the edge of the line. It's a great question. I don't bet that things break irrational all the time. So like right here, I would trim a little bit. So if I bought the dip and we pushed through here, I would trim and maybe put half in my pocket. I would in that, and that's a great question, right? Yeah. And so the new way we're going to display that is like a bar. And let me see how far they are on that project. I think they're going to release that on Friday. Hold on. The new release. Oh my gosh. Oh my gosh. Okay, we have oh wow, okay, thank you. Okay, actually I have the new release right now, guys. I can go, let's go see what it looks like. I don't know if they did it. So the new release has 5 brand new things on the test server. Y'all want to see what the new release coming out is going to look like on Friday? Of course you do. How could you not? Okay. Okay. Y'all ready for this? Are y'all ready for this? Make sure you guys click like button on the stream really quick. Alright. If y'all get to 50 likes, I'll show you a sneak peek of the new version. It's got something in it you guys have been asking for a year. Pixel, I didn't enter any day trades today. I'm just still along the same swings that I had yesterday. I wanted to buy McDonald's. I just ended up not doing it. For no reason other than I was talking. But I'm in Apple from 2 weeks ago, JP Morgan from 2 weeks ago, NVIDIA and Pepsi from 2 days ago, and SPY from 2 weeks ago that I've trimmed 70% of the position. Click that like button, y'all. Click it. 41. Let's go. Don't make the music's too loud, by the way. Oh, we have a pretty cool thing. Y'all are gonna love this. Do me a favor, you guys. Also, you guys do me a favor and do this really quick. Follow our subreddit. We just made one. We're about to go pretty heavy on that too. It's going to be Rocket Scooter of course. And I want you guys to do me a favor. Go here all the time. There's no music. The music just stopped. Let me know if it's too loud. Sounds like it's going through your microphone. Oh, probably. Do y'all like music in this setup? I know it sounds better when it's from my actual computer. Very faint. Yeah, we'll just pause it. Okay. 5 more likes. We'll show you guys the new version. Let's get everybody we know in here really quick. Oh, today's 10:20. I need to continue. I need to remember to like change the name of the stream. I feel like people are like, oh, I don't want to watch yesterday's stream. Okay, boom. Okay. Okay. New version, you guys ready for it? By the way, I have a birthday in 2 days. I will send you an address. You can mail me gifts. I know all of you are thinking about it. Did I make any cookies yesterday? No. Did I say I was gonna make cookies? I can't remember. What did I do yesterday? I went to Manitou Springs in Colorado Springs. Got really high on edibles and walked around the town. It was a great, chill, peaceful day to like not have you guys pissing me off. Oh yeah, oh that's right. They did. They had this at the bed and breakfast we were at had this rolling pin that had little marijuana leaves on it. So it was a marijuana themed bed and breakfast. It was pretty adorable actually. And there was it was like a house with maybe 7 or 8 rooms. The rooms had like key padlocks on them, and there was this common area. So You met all these strangers just hanging out. There's a hot tub that was decorated, for Halloween, and there's just snacks everywhere. So like there's like little Debbie's and chips. It was kind of a fun, quirky, uh, you know, experience. So it's kind of neat. Like if you're a 420 partaker, it's designed to just kind of be like a nod to your lifestyle. It's kind of neat. It's cute. And they had like paraphernalia in the rooms. The decorations were all weed leaves, this and that, and it was kind of fun. But the people there were so nice and chill. The owners would get up and cook breakfast. They're like, "What do you want? You want a quesadilla? You want scrambled eggs? You want an omelet?" Like the hosts were the best. It was one of the best experiences I've ever had at a hotel, even if you don't partake uh, in the 420s. Um, as far as bed and breakfast goes, they were the most hospitable people I've ever met. And I told them as I was leaving, it's like, this is probably the best, neatest experiences ever. I mean, you're in the mountains and beautiful scenery. It was really cool. Uh, October. Oh, Blue Edge, your birthday's in October. Dude, nice. See, Libras are the best, man. I'm not going to lie. The rest of you, y'all are all right, but Libras are the best. Okay, you ready to see the new features? Okay, hold on. Before I do anything, I don't know what this is about. Let me try something. Let me send him a picture of this. This is before I show it to you guys, let me make sure I send him the picture. Okay, new release. Okay, ready for this? Okay, all right. I'm gonna show you guys what we got coming out. Okay, number one, I want to see everybody pumped and excited about this. The Costa Springs area. Oh yeah, super nice. We're going to Red Rocks tomorrow to see Griffin in concert. So, oh, Leanne, Leanne, yeah. They said bless you. They heard you sneeze.
Oh,
with Nicole's family. That was her sneezing. That's it is like super cold today. I stole Nicole's shawl. Yeah, I love it. Okay, you guys ready for this? Look at this. You can now resize the columns in Scanner. That's a huge deal, right? We're doing the platform modifications now. We'll be able to resize and pretty soon move them around and rearrange them. Yeah, I know, mind is blown. It's the best thing we've ever invented. I know. And I'm glad that he squeezed that into this patch because that was part of another sprint. And when I told you we met on Monday to redesign all of our epics and our sprints over the next 3 years, we squeezed a bunch in. So you're not coming here. Now, the problem probably will still be that it will not save your settings, which I know that sucks. But at least in your session, it'll be okay. So again, user settings is a whole bigger thing that we're working on to save it, but at least that's working. So that's pretty amazing, right? Give you guys the ability to actually space it out and make it look a little better. I'm not sure what the scroll bar is. When I told him that, I think it's just a mistake there. So that's one of 5 things that's coming out on Friday. Number 2, this has to do with the affiliate program. This is something that's internal to our company. But if you are wanting to be a Rock Scooter affiliate, we do have a sign-up process. We're very selective on who we partner with, but we are taking partners and paying them to be part of our family as far as working together or collaborating with the community. So if you're interested and you have a traded community of reputable, I guess, good reputation, you're reputable, things like that, feel free to make it known to us, and we'd love to work with you if you pass all of our tests. So that's super cool. Number 3, the cancellation subscription issue is a back-end thing. We found one bug where back in the day, what actually was happening was the free trial, when we took the credit card off the free trial, we had to write some special code to get that to happen because it's really hard to do no payment for a free trial on Stripe, but we did a workaround because we're really smart, obviously, duh. But the bug that came out of that was that we had to kick you out of the free trial manually to cancel it, right? So we wrote some code to automate kicking people out, but sometimes it would kick out paying members. Oops, sorry about that. You wake up randomly and Rocket Scooter is not showing the platform, and it says, please subscribe. You're already subscribed. That's about 1 out of 30 members experienced that. Very small probability it was you. But if it was, you just cancel and resub. We figured out what was causing that. It was a very interesting bug. But it made sense. And then we go, oh, okay. So that's been fixed. So you should no longer get kicked out of the platform you paid for. That's kind of a plus. So if you do, or you wake up and your platform is not gone, your platform is gone, you paid it, do not panic. Just send me a message. It takes about 1 minute to get you back in. It's annoying, but it is fixed now. So that's good. Shouldn't have that problem, but there could still be carryover. So there shouldn't be, but we'll double check. So you guys are good there. The zones indicator has been renamed to finally what is supposed to be called liquidity map. So there you go. That's the name of the indicator. We called it zones back in the day because there was 2 functions. It's not called zones indicator, but there were 2 functions on display where you can either display it in zones or display it as walls. Walls would draw a box or a line every single wall. We thought zones was more, aesthetically appealing. So our design team was like, well, instead of just having like line, discontinuities all over, the zones make it easier to plan and play with because we only really trade against the boundaries anyways. So we had 2 options, walls and zones under liquidity map. So you would pick liquidity map and then you come over here and then you could click like walls or zones to have it function, draw it differently. They took that as 2 different indicators. They created a zones indicator and a walls indicator, and then liquidity map would toggle which one it displayed. Instead, that caused confusion as people go, I don't understand what zones is. How to get liquidity map on the indicator? And I was like, oh, we have to go type in zones. And there used to be a toggle between zones and walls that didn't necessarily change the display. So all that's been rectified. You put in liquidity map and you're good. So in the future, you'll be able to come in here and toggle, again, zones or walls as a display function. So you'll have like liquidity map, date, mode, depth, display might come under here, and then it'll show the display. That's super cool. That's a good one. And number 5, fixed for server files. Nice. Okay. So this is an internal server fix. You guys will notice this. We used to do sometimes a server would fail over the weekend when we would fetch for data. It's neat when you're building a trading platform with a team of people where half of you guys are traders and the other half know nothing about the stock market. And half your development team is in the States, the other half is in India. So you have kind of like this time zone gap that you have to, stay up late, and then they have to wake up early and things like that. And then some people haven't traded, some people have. So you have, when you're building a trading platform, communication, as we discovered, is the most important thing, especially from non-trader to trader. So the neat thing about it is through the growing pains we've had as a company, we've learned a whole lot about the hurdles to why people don't build trading platforms every day, because there's so much to it. It's very rare to have a trader and a programmer built into one human. So to explain what different things, again, the zones and the walls thing, the choice to have them labeled differently. As a trader, you'd be like, why is it just not called liquidity map? As a programmer, they'd say, well, it's 2 different functions. I mean, why don't they understand that? And they're like, well, because that's the name of the indicator. And they're like, well, what do you mean name of the indicator? That's the name of the function. No, indicator is what the user is going to select from the box. And they go, oh, okay. So the indicator is like Coke, Pepsi, Miller Lite. I mean, it's a brand, right? A moving average is a brand. It's the same no matter where you go. So liquidity map is the thing. It's not like you would have a 9-period moving average, an 8-period moving average in selection. You normally would pick it and modify it within. And it seems intuitive, right? Only because you're a trader. you're not a trader, your brain would normally not think like that. So then we're like, oh yeah, that's right. So that's my job, right, as CEO, to create the communication between all those barriers. So the neat thing about our team is that as we're growing and getting better, they are phenomenal. Like the non-traders know more about trading now, probably than some of the traders do. And the time zone difference and the way that we do project handoffs and daily shift changes and things like that has been night and day difference. So as we're doing that, a lot of the projects you're going to see is going to be a lot of bug fixes from the initial design. Because as we grew really fast, right, we hired 2 new developers this last week or 2 weeks ago. So our team is growing really quick. You guys know, you all know Amjad's our head of development. We hired 2 guys of equal competency to Amjad. So we have 2 new senior level guys. Amjad's more like a principal level actually, so he's a little bit higher, but they're senior level. So we have 2 brand new senior level engineers working for us, and they're going to be cranking out features left and right, which is why you're seeing updates almost weekly, which I'm glad you guys can say. And what I'll tell you guys to do is to go into chat and be like, yo, Amjad, you're the best. Pat him on the back, because this guy, let me tell you something. His daughter had a wedding, and I'm still getting WhatsApp messages during his daughter's wedding, okay? He had surgery on his gallbladder, and he's still texting me from the hospital bed. If you guys don't go over there and you tell him he's a fucking superhero, you know, I'm going to tell you something. This guy, this is his baby as much as it's mine. So you make sure you tell Amjad, AMJAD, go pat that dude on the back. Okay. He quit his company to work for us full time because he loved this platform so much. He's the reason it is. So super, super, super cool. Building applications is not easy, especially a trading platform. It's not. And being some schmuck like myself, I don't know how to run a software company, and I had to learn on my own. Lots and lots of people here advise me and teach me how the business works, which is great. Okay, so somebody asked, thank you, happy birthday. Didn't bake cookies, but they baked cookies. Actually, they were pretty tasty. Why hasn't DD been calculated? It has been. Let me double check. We had an issue this morning. It's kind of funny, and I didn't even notice this. This morning, there's a problem with so Google, right? I added Google Photos to my phone. I was trying to like store some things in my Google Drive, not just my iCloud Drive. And when I added Google Photos, Google synced everything to my Google Drive and filled up the storage immediately. And you get that like message from Google that says, expand your storage for $199 a month. They all have it. His Discord handle is Amjad. I just typed it in the chat here. So the funny thing about Google is that, it's the same thing. It filled up the storage. So when your Google Drive storage is filled, you can't update a Google Sheet. And Google Sheet is our prototype doomsday calculation that one of our mods does. And it wasn't saving. And we were trying to figure out yesterday and all day why it wasn't letting him update. So apparently when your Google Drive is filled, you can't update a Google Sheet, so you pay them your $199 a month. Clever trick. So I had to go in there right now and unsync all my photos. It just had dumped my camera roll to Google Drive, which is really silly. So doomsday has been calculated. I think if you can drop those numbers in chat really quick, let me know. But we've touched both of the bands, so it's irrelevant at this point anyways. If you touch the lower band and touch the upper band, the doomsday tells you just to pivot up or to the lower band, and once it touches it, the trade is over. Anyways, so it doesn't matter what it says. It's already achieved both of them either way. So your D picks are messing up our DD. I mean, you can blame Nicole for that. No, I'm just kidding. That's hilarious. That's another question. How can one interpret the rates of change and resilience? So the way you look at Alan, great question. I could tell you ask a lot of technical questions, and it might be neat if you want. You and I can sit with each other, or any of you guys want to do a special session over Zoom maybe later. If you guys want a more technical explanation off the record, just kind of like, I tend to, when I go long-winded descriptions of math, the numbers dwindle a little bit. People get a little tired of hearing about calculus and stuff. But if you guys want to have like a more detailed Zoom session later today, I'm all about it. In KRG, I can't help it because, the pictures are so big. I mean, what can I say? There's a lot of bites in this, big bites in this picture. I'm trying to make dick jokes. It's not working. No, seriously though. Yeah, so we'll do it later. I wish I might. Oh, I can't draw on my screen on my laptop. So, why does job loss matter when it comes to fighting inflation? Okay, so the relationship between inflation. Okay, it does in a way, but let me walk you guys through the steps. Okay, so inflation traditionally, right? Think of a market that's not experienced COVID. Inflation typically comes from the idea that imagine that you own you build like the best burger shop in your town. You sell hamburgers, right? And everybody comes there and lines up out the door. Like no matter what, people come to your burger shop. You're the only one in town, and you have a line out the door with 1,000 people every night. So you start staffing up and expanding, and you build that into your baseline cost, and you expand and you raise your prices a little bit. You add a little bit of profit to that too, right? To keep your margins the same percent margins. You have to raise your price a little higher. That's what causes inflation globally. Is that the more money you get, the more you expand, the more you can charge to cover your expansion costs, and people are buying more stuff from you, which means you have more money in your pocket. It means you're buying more stuff from them, which means their companies they all work for, your customers, have that same loop back to them where they're making more money and they're expanding. So, and imagine your burger stand, you have a competitor, right, open up across the street. So the more people that are working, the more people that are going to stand in line for the burger store and make that loop nice and strong, right? Now you have a competitor plops up across the street, also a burger store. Your line cuts in half, but you're still okay. His line gets the other half, and y'all are both doing okay. Now you are both killing it. You're both making a ton of money. You both expanded, and slowly but surely, both your businesses naturally grow, and you get more customers from the people who just haven't discovered either of y'all yet. And both of your lines are slowly growing, even though you don't own all the market share. You're still growing, and they're still growing. So as long as you guys are both still growing, and you can keep raising your prices as you expand slowly but surely, you're going to raise your prices to the upper ceiling of you start losing customers. If I make my burger $5.50 to $5.60, nobody's going to notice the difference. If I make my burger $5 to $7, well, you're going to walk across the street to get the other burger, right? So competitors keep each other in check from raising prices too quickly, but sometimes the price is still raised too quickly anyways, as people get greedy or expand too quick. And that's where the Fed comes in, right? The Fed comes in and starts to try to raise interest rates to slow that process down so that people don't expand beyond the ability for the customers to support your rate of expansion. Imagine that everyone goes out there and spends all their free cash to expand their business, and now nobody has any flexibility. Then all of a sudden you start having problems that your fryers are down. Well, you ran out of money, right? You can't support it, and all of a sudden your business shuts down, and it just lopsides the economy because everyone goes across the street really quick, and he gets all that business, and he jacks the prices up because he's the only burger place in town. Do y'all see that problem? So imagine that I spent all my free cash to expand my business. I have nothing left. Then I can't make French fries. They have to go across the street, and he's going to charge double for those French fries. Imagine that volatility on a global scale, right? When people expand too fast, they get greedy, and they run out of ability to keep their business robust if they go too greedy on that expansion side, right? So if the economy expands too fast, you can have volatility introduce itself from that example. Does that example make sense to everybody? Your competitor can corner the market if you have a little bit of problem and you don't have the ability to solve it. You ran out of money. You get too greedy, right? So the Fed tries to allow the total inflation rate. Inflation is the rate at which prices go up. And obviously, if you need to make more money, you're going to raise your prices. So if everyone's raising their prices ridiculously, you can cause lopsided imbalances and volatility. Volatility creates illiquidity in markets. And illiquidity can create oops, companies are dead. Let's shut everything down, lay everybody off, right? That kind of stuff jolts the market, which ripples into everyone else's effect, right? So I've been sitting some good information there. So that type of inflation is greed and fear of different smells. Alan, I love the way you said that. It's perfect. So the idea is that the Fed will want to keep the economy expanding but stable, as a whole, and that keeps people from waking up to windfalls if they go invest in stupid things and run out of money, but it allows you to expand at a rate at which, humans make babies, make more jobs. There's always a delay as population grows and jobs get created. It's just the mathematical magical target that lets the market expand, because you have to let the market expand, because there's always more people one day than there was the day before. Because we make more people, therefore we make more jobs, therefore we make more circulation. That original example. More jobs, more money, more spending, more people in line at your burger shop. So the economy has to expand, and you have to have inflation because population grows, and that's the reason inflation's allowed, and it's not set at zero. So going forward with this environment we're in now, competition keeps prices in check, right? And so when you get in an area like COVID, imagine what COVID did to the economy. So say that your fryer went down to your burger store in the original example. Your competitor jacks up his prices because everyone goes across the street. Well, COVID, oh boy. Imagine flipping a switch, shutting everybody's fryers off at once, and then turning the switch back on with a very quasi political, fear inspired, um, partisan, polarizing question of, is COVID a hoax or is COVID real? And then people turn their fryers on randomly based on A, their desire to do business, versus B, their fear of dying, right? Imagine that there's no consistency. You walk up to both of those burger stands wanting a burger. You won't know which one of them will be open that day. You won't know which one of them makes you wear a mask, which one doesn't. You won't know which one of them um, doesn't care or not. So people get extremely polarized in that situation, and inefficiencies run rampant. Both the burger stores are closed because both of them believe that, they want you to stay home and be safe, okay, and their workers as well. So now you don't know where there's a burger. Now you're starting to Google something like everyone else, and they got to drive all over the place. It just introduces all these extra steps to that. And imagine that you are um, you know, a lumber yard. You need you know lumber coming from the trucks that ship to you. But then all of a sudden, that truck got an offer, double his salary to ship to someone else. And he breaks his contract with you and you sue him, but he doesn't care because he made more money on top of the lawsuit anyways. And now the contracts are broken. Globally, that's what happened. People, the person in town that's like, I don't care about COVID, I'm still gonna drive my truck. The only truck driver in town is the only person with a working fryer, right? Jack up the prices of his costs, which means for the company to sell their product, they have to build that into their overhead and then sell it at a higher price, right? That's the inflation we're experiencing now. It's different than everyone doing well. It's due to shortages on the upstream side of raw materials, production, labor costs, and transportation. And it's called cost push inflation, which is what we're dealing with now. And the only thing that repairs that is the original example, the competition that caps growth. That same competition undoes hyperinflation. So if both burger stores turn their things back on, and they're both working, and they both have to charge $10 for a burger, and you've Googled somebody down the road that's $5, the only way that you're going to get your customers back is if you lower your prices. So cost plus inflation, as people get their jobs back, this answer your question. As people get their jobs back, that company is forced to lower its price to maintain that person's employment. So you said, how does job loss matter when it comes to fighting inflation in this environment? If people lose their jobs, it's a sign that the company can't sustain themselves on those margins. So the raw materials and labor cost more than they can sell their price to maintain business. It means their competitor is more efficient than them. So if company's firing people, it means their competitors are operating more efficiently in this environment. Does that make sense? The labor is expendable. So those of you working from home, watching Netflix for a paycheck, you're getting laid off because you're the inefficient side of labor in this environment. In other environments, job loss doesn't typically come from inflation. In other environments, job loss comes from the market collapsing or the company stock price tanking or the company needing to cut corners to stay afloat, with or without inflation. So in this environment, if company burger store A brings a bunch of people back, they can lower their prices just to the point they're making a profit, or lowering prices below that to operate in the red just to get their customers back. Either way, they have to lower their prices to get their business back because people are going elsewhere. But on the plus side is that if you locked into a contract in a desperate situation with the truck driver at double the price and you're stuck with him, then you're stuck in a loss. And if you are in the place where you need somebody now, as the labor market improves, then the competition between labor costs comes down. So now there's 50 truck drivers waiting for, a contract. They're not going to be gouging prices anymore. They're going to be competing with each other for your business. So as people get their jobs back, competition will bring prices down and cost push inflation type environment. So when jobs are going away, the problem is prices may have to go up, because if your company's not turning a profit, there's two ways for you to get a profit. A, you fire people to get cash flow to become more efficient, or B, you raise your prices again. So there's the tie-in, Venomer. Does that make sense? In this environment, you start seeing companies lose jobs. Your first thought would be, okay, they have more cash flow, they're gonna be more efficient, their bottom line's better. All right, but they start raising prices, and the real reason is that their margins are so small they're not making anything. So people are still gonna have remnants of COVID, where they have to buy all this raw material and stockpile it when there's a shortage. They paid a lot of money for it, so they have to build that high cost into their prices at the end of the day to sell to you. Now, as we start to develop a production surplus, as people get their jobs back like they have been, prices are going to come down and companies are going to operate at a loss, right? The margins are small. So earnings quarter to quarter will reflect that. So it's a slow moving ship. Companies start laying off now, and 1 to 2 quarters later, you'll see that reflection in their earnings. What did they do with that extra money? Did they, better their situation, get better, logistical improvements, whatever? So Wall Street will try to get ahead of that. When people start losing their jobs right now, Wall Street's getting ahead of that as that being a good sign. Companies are going to become more efficient. This is the rule of thumb when it comes to layoffs. If layoffs are coming at the end of a recession, typically the market's already bounced and recovered. 2009, market crashed. In 2010, market was rallying. My company, Dow Chemical, I was a chemical engineer running a acrylic acid monomer reactor unit, Dow Chemical. We're running 3 of them. Company was doing great in the green, and then market hit a recession, and then summertime came around, stock market had rebounded and was doing great, and everybody's all happy. Then my company announced layoffs, right? So layoffs don't typically happen as stock markets are crashing. Layoffs typically happen after the stock market has crashed and is climbing back, and companies need to trim some corners to get their stock price up, and that's why they do it. In a downturn, you're slow roll, you have a lot of free time. Companies will go assess who's expendable and who's not, and let them go to get that boost back where they can actually, start growing. Let's see what you guys are saying to the commentary. By restricting cash flow, consumers, in turn, reduce their purchases, in turn cause companies to reduce their price like demand. By restricting cash flow, so with the Fed. Yeah, so another thing is that the Fed has this ability to destimulate different types of lending, which can destimulate overall spending by the Fed funds rate. Participant banks now have a different risk associated with lending to whatever they lend to, versus getting their interest from the Fed. So when the rate goes up, banks tend to lend out less to whatever bank it is, whatever their purpose is, to their customers. And it's kind of like the competition between fixed income returns and stock returns, right? You have at some point, one becomes a little more appetizing than the other. So the Fed controls that hyper economic activity that way by changing the rates. But in this environment, rate hikes and rate cuts do absolutely nothing for inflation. It's It's a dumb number that CNBC says that the Homer Simpsons, my buddy, I think SoFlo, says the Homer Simpsons of the world can understand it, which is kind of like, remember in the episode of The Simpsons where it was October and Homer was investing in pumpkins because they always go up and they're going to keep going up because people love pumpkins. So the Homer Simpsons of the world understand that rate hikes and cuts help inflation. In this environment, it's a farce. They do nothing for it. So the only thing that's going to bring inflation down is people staying employed and companies becoming slightly more efficient during that. You need people to stay employed, A, so they can keep buying the stuff and keep the economy going, but you also need them employed so they can put their money into a 401k, which puts liquidity into the stock market, which is why the Fed is introducing quantitative tightening now, so they can take their money out of the stock market, the markets in general. So if people lose their jobs, the market loses its liquidity. And that's the bigger problem. And that's what, as traders, we need to get a step ahead of understanding that. Um, we lose 10%. Imagine everybody in the world is putting $500 a month into the stock market. Right? Imagine if we cut that by 10% because companies are going under. Imagine the stock market becoming illiquid. It crashes again, which causes more people to get laid off, which causes bigger problems. In a period of inflation, that's the stagflation that we can possibly face, is people losing their jobs while the market's already not have the Fed providing liquidity, and we are the provision of liquidity. As long as jobs market is stable, we're good. So that's the problem now. And yeah, Benamert, you're right. Is the job loss the main indicator Fed looks for when it comes to reducing inflation? I want to say reducing inflation, it's a narrative. The Fed knows what they're saying is for the Homer Simpsons. They absolutely know that the rate changes are not going to do anything for inflation. That's why they're so aggressive. We think we went immediately into half a basis point, 3/4 of a basis point. The market hasn't crashed off of that, right? It's really not doing much. It's the Fed's ability to push liquidity responsibility to traders like us in a mode where we can handle it. The market's so liquid right now, it can handle some bad news, right? In a time period where the Fed needs to destimulate some kind of lending from different areas, they want to affect the overall interest rates in general, because if you let people get carried away during COVID, you get a problem, right? You can create bubbles in spot markets, and we almost did, right? How many of you paid 50% over ask price because you wanted a house so bad this last couple of years, right? The Fed talking about raising interest rates is more of a psychological thing to get people scared of spending money more so than it is to really change inflation. They know that they're just saying it so Homer Simpson and CNBC can just like, inflation is bad. But in reality, they understand that by raising rates, the market will come down because Wall Street just sells on that news. And so in QT especially, it's historic. They know that'll happen. And so that'll slow down stupid economy. And how do you know what stupid economy is? I call it stupid, is because people go out there and buy $500,000 cartoons as an investment because they're so diversified and the market is so good and everything's going up that you now diversify further. And this is the rule of bubbles. Bubbles are based on greed and stupidity. People just don't think it's going to break and they go out of it. So say that you bought all the stock you can buy, your IRAs are maxed out, your 401k is maxed out, you got a house, you bought a donut shop, you bought cars, houses, whatever. You have no more places to bury your money as a rich person. Then the more diversified you are, especially the riskier assets, they're things you can write off as losses anyways, higher risk, higher reward. But at this point, you don't care because you're doing so great. So you can invest in riskier things as you diversify outside of the safer things. The riskier things can promise a bigger reward, but they also are a bigger loss. But hey, bigger loss is bigger write-off. And you can write off your other wins with the loss. Say, hey, whatever. I'd have not my money not sitting cash. Let's buy a cartoon monkey, right? So, or hey, let me buy my $400,000 house for $800,000 because, well, housing prices are going up and I better get in now, right? You put a little scare into the world with QT and rate hikes. People double think buying stupid things, and stupid things in an area of COVID created a bubble, and crypto crashed and NFT markets crashed. Stupid things are the first things to crash. So you saw a small housing bubble for a little bit, didn't you? A couple of years, right? Houses, people paying ridiculous prices for houses and things like that. The Fed had to kind of like slap everyone in the face after COVID, and that's kind of what they're doing. And they're also saying they're getting out at the top because they see our behavior is a little greedy. We're being stupid with our money, and they're initiating QT when the market's liquid because we're creating bubbles in the housing market again. We're creating bubbles in raw materials and commodities markets because of shortages, and we're creating bubbles in tech markets, right? So, any questions? So the idea is that there's a whole connection between the Fed's ability to print money, supply money to the government. There's all kind of connections between government debt and in the it's a very strong spaghetti bowl that this kind of goes beyond the scope of the stream. But that's to answer your question. Is that yeah? So I'm not the biggest fundamental expert by any means whatsoever, but I hang out with a lot of friends who are, and I'd love to like maybe get one of them when we do the real streams. When I start getting back, we're gonna have co-streams with me and others where we would have 2 or 3 people on the screen at once talking about the markets. I'm gonna bring in some of my fundamental friends that can explain a lot of that stuff even better than I can. If you lose your job, you're willing to work for less. Deflationary, Goldie says. Yeah, absolutely, and that is deflationary. So there's a lot of natural checks and balances that can repair the economy that as is that the Fed really has no handle on. But what my belief as a trader, and this is my long thesis why I've been buying the dips, and I'm making like the best trade probably of the 2020s decade that I've made. This is going to be one of the best trades I've ever made if I'm right. Um, Calling a bottom and rallying it up is that I believe that the FOMC is playing the psychological and the narrative game, and very easily telling you his motivations in every speech he ever gives is that it's like the labor market, labor market, labor market, labor market. So the Fed is going to aggressively take a risk off of their plate as long as we're willing to take it. If we're buying stupid stuff at stupid prices, the Fed has the ability to say, well, go for it. We're going to pull out and pull out and pull out and force you guys to buy the safer things that we're pulling out of. And if Wall Street sells the market into the ground
Hello.
because it's a liquid.
Hi, Kim. How are you?
Um,
Hey, so I was just with you.
One second, guys. we'll have an announcement in the Discord. Make sure you join our Discord before you go. I'll give you the links here, and I want you guys to do me a favor. Everybody here, we're going to talk about these. If you don't watch these videos, you're going to waste your time and waste mine. If you come out there not knowing what's going on, watch these videos here. Go to the Rocket Scooter Discord, and I want you to watch these 2 videos I'm going to post, and we're going to talk about them today, as well as a couple other things. So come out to the Zoom. We'll do this afternoon. You're going to watch. You need to watch them to the end. If you don't get all the techniques, they're only less than 10 minutes. So the best part of your day is going to be watching these vids, I promise. We're going to actually watch all 3 of them. Okay. They're the first 3 videos we've made in the training program, but total is like 30 minutes worth of stuff. At least we'll introduce you to certain things. And then today, after you watch those and understand them, today maybe we'll film one that's going to talk about. So we're going to watch them. These are the videos here. 1, we'll talk about how things are laid out, some basics of the platform, and really what we're trying to do is just build out our strategy. Okay. Actually, watch them like this. We're building out our knowledge base with new videos. That are basically the old videos were made before we had our platform. So now that we have the platform, we're going to update all our videos. We're going to be filming one today, so feel free to come. Okay, we love you guys. We're going to bounce out of here, but we'll see y'all later. Okay. Breakdown of 1-minute pennant reverse version opening. Resiliences are still good in general. You're talking about SPY, right? I think market's pretty stable. We're not seeing any wavering resilience just yet. I think market's nice and chill. Now there is that resistance, right? You have another liquidity pocket here. Usually you go from pocket to pocket as a peak of the day. So that's basically the limit of today. When I talked about this morning, the upside usually limits itself to a liquidity pocket run, which is right here. And that was the run. Plus we're playing at that upper DD band. If you guys need access to DD band, or you want to join the lifetime program, send me a message right now and I'll show you the discounts and everything. And you get like a huge, much deeper dive. Like that, all that. So we'll talk to you guys later. Y'all have a good one.